But let's get in Nikhil Khandelwal from Systematix Group, who joins us now to discuss market fundamentals and his top sectoral picks. Nikhil, welcome. Thank you so much for your time here on CNBC TV 18. Let me first start with that, conference you recently concluded. There are 29 promoters that have made presentations, and you've come up with this detailed note on it. But, in a few lines, if you could sum up the mood from the conference for us, are corporates a tad more optimistic now, given that, the war in West Asia seems to be tempering down, oil prices are, looking better, cap expense picking up? What was the biggest takeaway?
Yeah, hi, good morning. No, so we had a very interesting event just a couple of days back. We invited companies which are primarily in the small and mid-cap space from 5,000 crores to about 75,000 crores of market cap. Companies ranging from financials, capital markets, to manufacturing, consumption, healthcare, etc. The larger takeaway from the interactions with the companies was, everybody has seen probably the most difficult period of, logistical uncertainty, the overall inflationary environment heating up, unavailability of raw materials, etc., etc. Even the tariff scenario, which continued to play over the past 3 quarters, has played a lot of havoc on companies' supply chain. The companies are broadly covered ground from there and are looking at a market much more optimistically. Most of the companies across these 29 to 30 names spoke of volume growth of upwards of 15 to 18% in their business, whether they were wealth management firms, whether they were chemical manufacturers, etc. The second thing was that everybody's beginning to now look at this weekend signing of the peace agreement and potentially looking at a life beyond the West Asia war. So I think given all of that, there is a lot more optimism across most of the businesses. We believe that the cyclicals, companies which are more cyclical in nature and more prone to the inflation cooling down, are looking more stronger at this point of time in terms of their earnings expectations and visibility, while others are more optimistic given that a lower inflation will help cool down the will actually bring a lot of consumption thrust in the Indian economy.
In that light, Nikhil, which are the areas that you have put money to work with during the war period as well, and now with this uncertainty coming to an end, and as you mentioned, looking at a life beyond the war, are you making any tweaks to your investments that you have made recently?
No, so I think we've been consistent on investment in certain sectors, which we believe that a war or no war, I think they would be areas which will continue to show sustainable growth. So we have been quite positive in our weightage on the larger manufacturing space in India, whether it's the capital goods manufacturing, whether it's the electronics manufacturing, or even certain export-oriented businesses like textile manufacturing. We have been quite positive on that space in general, because what we have seen that the China plus one and the Europe plus one theme has continued to play to the advantage of Indian manufacturers, whoever are in export-oriented businesses. And in general, the India's power and capital goods manufacturing theme will continue to play strong. So I think that sector and that weightage for us in that space remains quite strong. However, given the last a week or so of developments, we believe that a significant amount of weightage we are now bringing back into cyclicals, and we believe that a lower oil is not just a reduction in inflation; it is also a potential sign of strengthening in rupee. It can also lead to a lower interest rate environment in the mid to long run. So, given all of that, we have started to become quite overweight on financials as a space. We believe that the larger banks will be the first big beneficiaries of the next 6 to 12 months as inflation, rupee, and the interest rate environment cools off. So the larger banks becomes a big overweight position for us, led by the ICICIs and SBI in particular. Cap goods and manufacturing space, which I spoke about, I think across the board, whether it's defense, whether it's power, or it's railways, or textile products, I think across the theme, we like a lot of large to mid-sized companies and believe that they will continue to be a strong play going forward. So I think these are the two top most weighted ideas and investment themes as far as our house is concerned.
All right, Nikhil, thank you very much for laying that out for us.